Welcome to the Video CPA's YouTube channel. I'm the Video CPA. My name's Michael Scott. I'm a CPA and a CMA, and I have a master's degree in accounting and 45 years of tax and accounting experience. It's good to be with you today. On this channel we talk about tax matters, possibly even some accounting matters, but most of it's going to be tax. So today, and for this video and the next 3 videos, we're going to be talking about some of the new tax changes that are going to be effective in 2020. These aren't proposed changes. These laws have been passed, and so these are 2020 changes. So in this video, we're going to talk about inflation adjustments. Every year the IRS does make inflation adjustments. Should be a pretty short video, but we're going to discuss those real quick. And then in the preceding 2 videos, as I put those out, we'll talk about some of the other changes that the IRS has made. Some to retirement plans, some to educational plans, that type of thing. And who knows, we still may have additional changes to go, but I don't think so, because it is an election year and probably not a real popular thing to make changes during the election year. So we have our affiliate disclaimer here. We have our educational disclaimer. And let's get into it now. So as I said, every year they make a bunch of inflation adjustments. These are going to be the bigger adjustments that we'll talk about. There are other adjustments that they make as well. And really, if you're using tax software, or you've got a paid preparer that you're using, you may not even notice these adjustments because they're built into the tax software. So if your preparer uses UltraTax, for example, you're not even going to know it. And if you use TurboTax to do your own tax return, you probably won't even notice that a lot of these changes have been made. But they have been, so let's talk about them real quick. So the standard deduction has been changed a little bit, and it's gone up for married filing jointly. Standard deduction is now $24,800 in 2020 as opposed to $24,400 in 2019. And you see single has done about the same thing. Married and separate, same type of thing. And then head of household has gone up as well. Okay. We also see an increase in the capital gain exclusion, and those of you that have capital gains know that there is an exclusion for the first so many dollars of capital gain. And so in 2020 it's gone up to $80,000 if you're filing jointly. And if you're filing separately, $40,000, or single, $40,000. So you can exclude that much of capital gain each year before you start being taxed on it. So the $80,000 has gone up from $78,000 to $750,000. So not a huge gain, but those adjustments, like I say, are every year, and they're done for inflation purposes. All right, a few other adjustments that we have. The maximum earned income credit has been changed up to $6,660. Just a small change. The qualified transportation benefit, if any of you get it, boy, they've raised that by $5. All right, $270 now. Maximum adoption credit, $14,300 now, up from $14,080. And your failure to file penalty, you see that's not just an inflation change, $435 up from $330. So you fail to file a tax return on time and they're hitting you hard. So $435. And that's been raising every year. So you need to file your tax returns on time, or file an extension. And if you're not sure of what your data is and the deadline is approaching, even with extensions, I would file a tax return. And if you have to estimate something, you can always go back and amend it if you need to. Now, the state exclusion has also changed. You'll notice up from 11,580,000 to 11,400,000. What this basically means is that there's, for most Americans that are average Americans, there's not going to be any estate tax on estates because most Americans don't have estates this big. But for those that do, it has been raised, and so be aware of that. If you fall under, if your estate is over $11 million, you need to make sure that you are aware of these thresholds. All right, the employee salary reduction for health flexible spending has gone up from to $2,750 from $2,700, and the lifetime learning credit phase out for kids going to school, that type of thing, yourself going to school. If your adjusted gross income is over $118,000, it's going to start phasing out. You won't be able to get that lifetime earning credit or as much of it. And that's up from $116,000. So those are some changes that we see just from inflation. They also changed the tax tables, so the tax tables have gone up. And all this means is you may not be paying as much tax in 2020 as what you were paying in 2019, depending on how inflation has impacted you personally. So you can see here the marginal rates have gone up. So the highest tax rate now is 37%. But in order to get into that tax rate, your income level has been raised because of inflation. So you won't hit that 37% bracket until you're making more money in 2020 than what you made in 2019, and that's the case of all of these brackets. So I thought I'd share this with you just because you need to be aware that the rates and the tax rates have changed. So that's a few of your changes for you. Medical savings accounts have changed. If you're an employee and you have a medical savings account, you can invest more in that medical savings account now than what you used to. And so you need to understand the difference between an MSA and an HSA. HSA is for individuals and families that have a high deductible insurance plan, health insurance plan. MSAs are more for employees that and self-employed people that are getting it through a company, and they've got they're allowed to get their insurance through an MSA or invest in an MSA. So one is company oriented, the other is just individual, non-company, non-employee type oriented. So HSAs did not change as far as I know, but the MSAs did. So you can put more in the MSA than what you could in the past, and your income level for the annual deductible has to be a little bit higher than what it was on your insurance policy. All right, that's it. Those are the major adjustments due to inflation. And next week we'll talk about some of the retirement plan changes and a few other changes that are actually changes in law and not just inflation changes. So thank you for being with me. It's nice to have had you here. Make sure if you haven't subscribed, do subscribe. If you want to find out more about tax matters, we have courses that are more in depth on the Video CPA's targeted tax training at www.thevideocpa.com.